Very good afternoon, everyone. Welcome to today's uLaw webinar. The topic for today's webinar is Disbursements, Demystified, and today's webinar has been accredited for 1 hour of professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. My support staff will be online and using the chat window. You're more than welcome to ask us any questions that you may have with regards to today's webinar. The webinar is being recorded and will be available to you on our YouTube channel, similar to all other CPD sessions and non-CPD sessions that we do record and have them available for your consumption in our YouTube channel. Please do use the chat window at any time and kindly request you to mute your phone lines, though I have technically muted you all. We tend to sometimes have those difficulties. Alrighty, like every other uLaw webinar, today's webinar has a very specific agenda, given the CPD nature of the webinar as well. And primarily we're going to focus and talk about, or rather I'm going to talk about, and walk you through, provided I have some time at the end, the types of disbursements that a legal firm has to deal with on a day-to-day basis, right? Really talking about what are disbursements to begin with, how does a legal firm like yourself manage it, some of the best practices that you can bring to the table to help yourself not only deliver these disbursements or pay for it, but ensure that you have the right tools and metrics to recover these disbursements, okay? So we're also going to talk about the different vehicles that you have as to how you can pay for these disbursements, whether you take the entire risk of paying for these disbursements or client-related expenses, as they're otherwise called. Do you take the risk completely to pay for it up front? Or the law societies across Canada have provided this wonderful opportunity for legal firms to use what's called a trust vehicle, where you can use the trust money in a retainer form and use the disbursements, basically taking the advance of that through the retainer and then paying for it through the trust account. So whether you take the entire risk, pay for it up front and wait for the payment, or take a retainer and the disbursements as part of that retainer and then pay it out of trust, those are the two options that you have. There's the pros and cons of both these options, with the pros slightly leaning more towards the trust account purely based on the fact that it does help mitigate some of that risk of non-recovery of these expenses. Okay? Then we'll, of course, talk about the types of disbursements, especially general disbursements. So if you have decided to pay for this upfront, whether you're collecting, Visa points or using a credit card, or maybe you're using other vehicles of payment, an answer. This is 1 hour of professionalism CPD credits. Okay. Types of general disbursements include billable or actuals, so the likes of an application fee, we'll talk about maybe a court fee, unit rate expenses, such the likes of fax, paper, printer copies. Sometimes there's mileage involved. Really comes down to how much you as a legal firm have agreed upon within the retainer agreement to charge for mileage. Some firms may charge for travel time, so there's quite a few examples of types of disbursements that you as a legal firm may charge as part of a file or a matter, okay? It's very important that you document and clearly articulate the expectations and the preset costs that are associated with these disbursements as much as you possibly can to make it straightforward and communicate that clearly to your clients. And finally, we certainly talk about the expectations from the law society of different jurisdictions, of course. We talk about the expectations that these individual provinces have out of you as a legal practitioner in terms of the storytelling, telling them the story of what happened with these disbursements and the types of documents that you could use to tell that story, whether it's a journal, ledger, your fee book, expense book. So there's many different documents, part of that law society compliance, if you will, that clearly articulate the story. And if you're making payments out of the trust account, of course, the trust ledger would certainly talk about that as well, the trust ledger and the journal. Okay? Before I can move forward with the next slides, I do confirm for everyone who's just joined us, today's webinar's topic is Disbursements Demystified, and it's accredited for 1 hour of professionalism credits in the provinces of Ontario, British Columbia, and New Brunswick. So we welcome everyone who's joined us from these 3 provinces and others. If you are from these 3 provinces, of course, you can use the term Disbursements Demystified within your Law Society portal to get the 1 hour of professionalism credits. Okay? All right, so let's get started with really the definition of a disbursement. Now, I've delivered these CPD sessions quite a few times, and it's available on our YouTube channel, but it's interesting that every time I talk about it, it almost seems like this is my first time that I'm talking about this, because this is a very interesting and ever-evolving topic. It's very interesting from the perspective that you have this opportunity on behalf of your client to make a payment, and then you have this opportunity as a legal firm to recover that payment, recovery of expenses. So it's really not an expense unless you have not been able to recover it from the client. Okay? And of course, this is a great service that you provide as a legal firm to your clients. Often you could have just said, hey, you go ahead and make that payment, but it's not pragmatic, it's not practical, and that's why you have, of course, these vehicles that can help protect your interest as well as facilitate the interest of your client. But from a true definition of disbursement, it truly is the expenses that you as a legal firm have incurred on behalf of your client. And I'll go one step further to say it's an expense incurred on behalf of your client for a specific matter. Certain files may have disbursements, some may not. You may have multiple files for the same client, and hence further subcategorizing that definition to saying expenses that have been incurred by your legal firm on behalf of your client specific to a matter. And that's the level of granularity that's expected from the ledgers and journals and the storytelling that's expected by the Law Society as well. So from a Law Society standpoint, it really comes down to simple terms of they expect you as a legal firm to manage proper bookkeeping of these transactions as they have either left or entered a bank account that you as a legal business operate. Okay, that's the storytelling. Anytime money enters a bank account or leaves a bank account, it's important that you articulate that transactional behavior to the Law Society. From an accounting perspective, again, comes down to managing the bookkeeping aspects of those transactions. And one of the fundamental steps that we continue to reiterate that's important for you to keep in mind as you manage these disbursements is having a procedure or a practice or a discipline across your legal firm. If you're a solo practitioner, then it's your responsibility. If it's a growing large law firm, then it's the responsibilities of everyone who's involved, who contributes to that business, or it could be that front office personnel. So whoever is identified as the responsible individual for these aspects or transactions need to capture these transactions and record them in a way that is easy to report, it's easy to recover, it's easy to relay to the client. So you've recorded a transaction, perfect, you've just paid an application fee of $150. Now it's important to record it in the right bookkeeping category. Is this for client A? Is this for client B? What matter is it? Today, we get to the granularity of even subcategorization of disbursements. You can subcategorize to say Were these disbursements paid towards Disbursement? Was this a disbursement that was paid towards a government surcharge? So now you have, as a law firm, the ability to further subcategorize even your disbursements. Tools such as uLaw facilitate that. So it's important that you have the easy record keeping in mind as these transactions occur in real life as well. And then being able to relay these in the form of a formal document, which is an invoice, which is a very important sub-step before you can claim that money back. Because that's the document in which you're going to articulate to your client saying, this is the application fee I've just paid on the 12th of September, and I request you to pay me back the money, especially if you've paid out of the general account. Okay? If, of course, you have now paid it out of your trust account, then relaying that message is slightly different. Now you're telling your client, I have paid that $150, and by the way, I have withdrawn it from the trust account. Just letting you know, and that money is taken directly out of the trust account and becomes part of that storytelling told by the trust ledger. Okay? So record, relay, recover. Now, how do I recover? As I mentioned, there's two ways. Paying out of trust, there's nothing to recover. You've taken the trust money, the advance that the customer's already paid. You've already kept a certain portion of that retainer towards paying those disbursements. It was never your money. It's not your money going forward. But if you have paid using the general account, then it's your money. You've just now paid $150 out of your business account on behalf of a client in the hope that when you do relay that invoice, that you are able to get that money back through a client payment. And that is the channel of recovering that disbursement back. Okay? And that's exactly what this slide talks about, is what is the channel of recovery? That starts with where or how did you spend that money to begin with? Okay? Did you pay that disbursement straight out of the trust account? In which we believe is a simpler process because there is a few steps lesser to ledger and journal in your bookkeeping, lesser storytelling as part of that overall compliance set of documents, right? In cases where you are actually paying for actuals, such as court fees or application fee, so on and so forth, it's not really a bad idea to use the trust account, especially if you have a trust account readily available as a vehicle to utilize, okay? Because for one, you don't have to wait to recover that expense. That's probably the biggest advantage that slowly tilts this to your favor. And as I mentioned earlier, it was never your money to begin with. It's just a matter of showing it as expense coming out of the trust account, and that's pretty much it. Now, if let's say you do not have a trust account, and for whatever reason you do not use the trust account to pay for it, then you probably use your operating account, general account, business account, whatever you call it, specific to your business. Okay? In all of these record keeping, it's important to capture certain elements of that transaction, because those elements also give you a flavor of that storytelling. So a ledger not only captures that this transaction occurred, the ledger captures when it occurred, how much was the amount, how much was the tax paid, who was it for, and a journal extends the flavor further by saying, what was the method of payment, right? So there's attributes of these documents that each contribute to expanding the storytelling of your bookkeeping. But at a very high level, it's important that you record the date when a disbursement occurred. Record the taxes that were involved, if any. So if you're paying for, let's say, a court fee or an application fee, and if there are no taxes, then no, they're tax exempt, clearly needs to be articulated that, hey, it was $150, no provincial taxes paid on behalf of it, and hence the total amount of recovery is $150. if for whatever reason you're charging tax, let's say for postage or fax, there could be other disbursements, right? Then if you're charging $100 and then in the province of Ontario, if you're charging 13%, then it's $113. Clearly articulate the breakup of that entire transaction's detail. Recording the method of payment. Now, did you pay this out of your business credit card? Did you pay this out of your general bank account? Did you write a check? Did you use a credit card, your debit card? Was it even your own money that you paid on behalf of your business? Even more important, especially if you're paying and recovering, you're not only recovering on behalf of your business, that amount needs to be recovered so that now the business can pay you back the money it owes you. So now you can see how sometimes convoluted paying out of the general account can become. And I'm sure these are things that you're dealing with on a day-to-day basis. And last but not the least, most certainly, which client and matter or file was this disbursement paid on behalf of? It's not just important to use the client's information. It's very important to use the matter or the file number or some way of referencing it to a specific file within the client. So if you're recording this on Excel sheets or if you're recording this on a legal accounting software, of course the softwares help you manage this through the workflow. But if you're managing this on paper, managing this on Excel, certainly keep a tab on all of these important items. Alrighty. We spoke about those 3 R's, right? Recording. So we just spoke about what to record and how to record it, when to record, and that's something that we often say, record it as soon as it happens. So if you've just paid for a disbursement today, please make it a habit to capture and record it really close to when that transaction occurred. The further you delay, it's unfortunately a very cascading effect to not only the effort, but the time and money that's involved in managing those transactions. So now that you've had a way of recording it, now comes the question of, when do I relay this? How do I tell this customer that I've just paid for this disbursement? Do I do it before? Do I tell it after? Do I do it in a particular time period cycle? Do I do it right away? The simple answer to that question really comes down to the binding document, the retainer agreement, or the engagement letter that you've signed with this client. Because each matter and the specificity of that matter determines the cycle in which you recover or relay, this expense. Now, if you're working with a company, if you're a corporate lawyer or a corporate legal professional, and if you have a retainer agreement that says you're going to be generating a single invoice at the end of the month that pretty much has all the legal fees and disbursements wrapped in one single invoice, then that's the agreement you've signed. Then you record them and you wait till the end of the month to relay that as part of that invoice. Okay? Especially when it comes to general account, right? If it's paid out of trust, the money's already left the trust account. That just becomes part of that invoice to tell you that it's been already taken care of. It's not waiting for a recovery process. The relay is even more important to help you recover it. So unless you have a very specific written agenda that you would only recover at the end of a time period, we highly recommend that you do it as and when it happens. So if you just worked on a matter, let's say this is not a corporate matter, this is specific to a private matter, you've just paid for an application fee, record it, and right away relay it through an invoice, even if that's the only transaction that's occurred. Of course, that just means you have an added invoice in your list, but if you can actually deal with it, it's great if you can do that. Or if you have to just wait for a couple of more dockets, get it done as soon as it has happened, closer to the date of when it's happened. That's the recommendation. As I mentioned, if it's paid from trust, it's already paid for, and you just communicate that to the client, that money has been taken out of trust. If it's paid out of general, then you mention that in the invoice with the expectation that a client payment is expected. Right? So typically what clients do is they would put a little paid stamp if it's especially paid from trust, or if the client owes you amount of money, especially in disbursements, then it's clearly articulated saying, hey, you owe me that amount. Here's a quick link for you to facilitate that payment. Okay? So that's when you relay. And how you recover, of course, the general payment comes down to, once again, fortunately or unfortunately, that retainer agreement. So what is your agreed days of sale? So what is your payment term? Is it net 30, net 15? Or if you've used a retainer and let's say you've paid out of your general account, but you have money in your trust account, because that's another total flavor to this whole thing, right? Now, in that scenario, where let's say you've got $665 as a retainer, your legal fee in Ontario is $500 plus taxes, that's $565, and you've accounted for a $100 application fee up front. And that's how the $565 plus $100 came about as the original retainer. Okay? And let's say the client paid you that $665. Once you've had your legal fees done and you've paid that disbursement, now what you have is the control of you being able to transfer what's called the eligible trust amount from the trust to the general account. In that case, because there was a trust account vehicle involved, but instead of paying out of the trust account directly for disbursements, you still paid out of the general, you don't have to now wait for a client payment. All you have to do is transfer the eligible trust amount from the trust account into the general account. And that's another flavor of how you can recover that expense. So I reiterate, if I went too fast there, a methodology to record disbursements. So let me just quickly go back. Alrighty. So recording the expenses and all of the different factors and data attributes that there are in those expenses. Date, amount, method, who was it for, so on and so forth. Then comes the relay part, which is generating an invoice based on your retainer or engagement letter. And the third comes the recovery, which you now have three different flavors. One is if you had money in the trust and you paid for the disbursement from trust, there's no recovery. Second, if there was money in the trust account as a retainer and you accounted for the disbursement as part of that original retainer that you got in, generate the invoice that has just made that amount eligible to you, and then it's in your control as a law firm to transfer the eligible trust amount, including the disbursement, from the trust to general. So you recovered that. The third is there's no trust. There's no trust amount at all involved. It's purely you do the work or you've just paid for the disbursement and you have to recover that. Then you generate the invoice based on the cycle of relay and then wait for the client to pay you based on your payment terms. Okay. So those are the three important R's I would consider when you think about disbursements. And just to give you some insight in terms of the types of disbursements, I'm sure you've already dealt with these types. Examples or best practices, if you may, of the types of account to use, whether it's trust or general, based on the nature of the type of disbursement. General thumb rule is if this is an actual amount, so what you paid is what you're charging your client, then you have the opportunity to use the trust account. And we highly recommend that you use it for your own benefit. Now, if you're looking for a margin up or sometimes a margin low, then highly recommend that you only use the general account. If you're using the unit rate or mileage, definitely the general account. Once again, if you're using any third-party consultants as part of that file, again, if it's on actuals, the consultancy company charged you $200 and that's exactly what you're charging your client, certainly use the trust account. But if there's a markup or a markdown, then kindly use the general account. Now comes the fourth R, which I didn't talk about, which is the reporting. Okay? And we spoke about the expectations from the law society. You continue as a phenomenal law firm, legal firm, to be able to do the right thing of recording, relaying, and recovering these disbursements on a time-to-time basis. Now, the Law Society wants to understand how well you've been doing as part of that job. Of the first 3 R's, and it's the fourth R that tells how well you've been doing the first 3 R's, which is the report. There are a few documents that the Law Society may ask you, or the auditor may ask you for. Some of these documents are equally important because they are expected to be generated on a monthly basis, such as the expense report. For example, the expense report not only captures the office expenses, but it also captures especially general payments or disbursements as well. So it's expenses on behalf of the client as well as expenses on behalf of your business that's captured in the expense book. And there are many attributes to that, including the taxes, because now you owe the government or the government owes you back the tax amount as appropriate as it may be when you compare the revenue and the taxes you received and the taxes you paid, right? So if you really look at the documents, there's, of course, the trust ledger, and then there's the trust journal. There's the general ledger and the general journal. And there's a specific ledger called the disbursement ledger, which pretty much captures each and every transaction of those disbursements for either a date range across all clients, or you can do them categorically for a specific client as well. It's important that these ledgers have a running balance, very important, by date. So you received, let's say, 665 in trust on the 1st of September, then you generated $500 of legal fees on the 5th of September, so that's 565, leaving you with the balance of $100 on the 5th of September. And then comes the 10th of September and you just paid the application fee of $100 and you recovered that money. Now on the 10th of September, the balance is zero. So showing that breakup of when that balance, whatever the amount may be, with the date is very important when you manage that ledger. So if I take this example, and I've always used this example across all my webinars, because this comes right out of the bookkeeping guidelines of LSO, formerly LSUC, where and you can see this as different examples across other jurisdictions too. For British Columbia, New Brunswick, clients that we have across Alberta, each law society bookkeeping guideline document has a very specific example of how they expect that storytelling to be. If you look at the trust ledger, you can see there's the date, right? There's certainly the receipt, which is how much came in, and the disbursements. Okay? Likewise, if you look at the general ledger, you see the date, the particulars, and now you see specifically dividing the total amount as pre-tax, taxes paid, total amount, how much is owed. And we'll get into this in a bit. And then comes the disbursement journals. And as I mentioned, there are certain additional attributes and information that the journals relay back to the auditor as different aspect of that story that they want to understand, specifically around the method of payment, because that was missing in the ledger. In the ledger, it's mostly, I want to go back real quick, it's basically the date, the particulars, so basically what was it for? Oh man, today's a bad day for particulars, how much was the amount, what was the running balance. Okay, so that's the ledger, and there's one major difference between that and journal. Besides the other differences that there are, has the date, has the particulars, which client, amount, but if you look at the second column, it's really the method. Okay. And of course, it also has, as part of its general disbursement journal, once again, it divides it before tax, the tax amount, and the total paid. Now, in addition to the ledgers and journals, there are what we call as the fee book. Okay, so there's the expense book, there's also the fee book. The fee book pretty much records all the fees and disbursements that were raised in a specific invoice. So when you relay that invoice, what that invoice has is all the legal fees that you're charging this client. Let's say in a particular cycle, you've included a couple of dockets and a disbursement. The couple of dockets add up to be $1,000. So let's say in the province of Ontario, it's $1,130, and there's a $200 disbursement, so a total invoice bill of $1,330. That information needs to be captured in a document called the fee book, because that fee book also keeps a tab on the invoice number. So how did you make the fees or the revenue for your business? Through the generation of these invoices that tells your client how much of money you're going to charge them and how much of money you expect to be paid. Whether it's a trust transfer or a client payment, that's secondary. The fact that you generated an invoice clearly shows that that's the amount of money that you expect from the client as revenue into your business. Hence, the fee book, because it involves the disbursement, is another added document that you need to manage that captures the disbursements that were part of an invoice. If you look at this example one more time, unfortunately there aren't any disbursements that have been showcased, but there's a column specific to that that clearly shows you that by date, by invoice number, client. You can go one step further and also capture the file, the actual fees that were part of that invoice, the actual disbursements, the HST, which includes legal fees and for the disbursement, and the total amount billed. Okay? So, what's the fourth R in terms of the final expectation from the Law Society? The ledger, journal, expense book, fee book. If you have a trust account, then you have trust ledger, trust journal. If you only have a general account, then it's just the general ledger, general journal, and the disbursement. Okay. So there's about 6 documents, give or say, that are important. Before I move forward, I'd like to take a pause just to make this a little more interactive. I know we have another 20 minutes, and this is a CPD, but it's all about learning. I'd like to understand if there are any questions that the audience may have at this particular time before I can move forward with showcasing typically what you should expect of how you manage this using uLaw just as an example of a software that does that for you. So let me quickly pause to ask if you have any questions, if I was clear in walking you through, of course, the types of disbursements, the different channels through which you can actually disperse these charges. And we spoke about the 4 R's, the first 3 being able to record, right? Being able to relay as part of an invoice based on the cycle agreed, and then recover either through those 3 different channels we spoke about. 2 that relate to trust, 1 which is purely general. And then the 4th R was the reporting requirements from the law firm towards the law society, which include the trust and general disbursement, the trust and general journals, and the fee book and the expense book. Okay, I will pause if there are any questions at this time. Maybe give it a minute. If you don't, that's totally fine. We can move forward. Okay, I will move forward then. So we now talk about, of course, we don't vouch for the legal accounting software, but we certainly want to share the benefits of any software system that you could utilize to help you with not only expediting the process of these 3 R's, because that's the 4 R's, let's put it that way. You have these responsibilities when it comes to disbursement or even legal fees of these 4 R's. Basically capturing it, recording it, let's put it that, record, relay, recover, and report, right? How do you do it? You can do this the manual way, or you can use a system that's well defined to do these 4 R's for you. And the benefit of a legal accounting system, of course, is that if you do have, let's say, the added convolution of a trust account, the reporting is already taken care of because most of the legal accounting software gives you the framework and structure to report it exactly the way the law societies want. What's important now are the 3 R's of how you record it. How do you relay that? And how do you record the fact that you've recovered that amount? Right? So those 3 R's are completely left to the law firm, and legal accounting software automatically takes care of the 4th. You go one step further, what the legal accounting softwares also provide you with this ease of being able to utilize the right software and tools that allows you to record it in time. So whether you record it in today's day and age with the advent of technology, and I've mentioned this many times, legal tech being at its prime stage right now, you have the opportunity to capture dockets and disbursements as and when they occur. Power of your phone, you can capture them anytime, anywhere, as long as you have internet. So you're not waiting to go back to your office to do that or write it down on a piece of paper before you can report it back. You're now able to generate invoices anytime, anywhere, and hence relaying it back to a client has become easier and faster and sooner to when it happened. And the legal accounting tools and software tools in general give you all the flexibility of being able to accept these client payments as and when they occur, either through ease of payment plans, so you can now facilitate client payment right from the click of a button, so that you're not calling them to recover it. You send the invoice with the client payment link embedded in it, making it easier for you and for your compliance needs as well. Okay? And last but not the least, from a legal accounting standpoint, it also facilitates that it blocks the eligible trust amount, does not allow you to transfer any amount that you wish from the trust to general. It, of course, has the boundaries based on the bookkeeping guidelines that facilitate that you transfer only the eligible amount that has been invoiced. So not only makes it easy for you to capture, keeps the compliance component of it right through it. So for those reasons, we encourage that you do a furthermore exploration if you're in that process to look for the right tool that can help you not only automate but also expedite these processes. Alrighty, so I'm going to quickly shift gears with another 10 to 15 minutes remaining in my webinar today. Once again, feel free to ask me any questions that you may have using the chat window. I've logged into a web console of uLawPractice, taking my fictitious legal firm, uLawPractice. He's a very famous character. I think he's been more famous through uLaw than his previous acting skills. So I'm going to start off with doing a quick client intake so that I can get the ball rolling. Let me say go ahead and add a new client. And I'm going to keep this straightforward. So let us say this is from Mr. Knight Hardy. Through friends. And again, you know what? I'm just going to go ahead and create a matter straight from here. Typically what you would do, of course, is create a client, ensure that there's no conflict by doing a conflict screening, ensuring the conflict check gives you the right information, making sure there are no conflicts, and then moving forward with the matter. But for purposes of today's demo, I'll go create that matter right away for Mr. Knight and create a file for that particular client. Provided we have time, I will see if I can do all those three examples of expense types, or how you can record. The recording and the relaying really come hand in hand. And I'll see if I can start off with a general account. Okay, let us say this is a small claims. And you're probably bored. If you've been part of my webinars, and you're probably bored of the fence issue. It's kind of a recurring theme in today's context, so I want to stick on to it. Alrighty, so we're going to consider the first example where there's no trust account involved, okay? So this is a very fairly straightforward situation where you do the work, pay for the disbursements up front, and then recover. So let's first record the disbursement. So to do that, you just say add new disbursement. Now you're paying from general, depending on the type of disbursement, because there's various different categories of these. If you're paying for actuals, so let's say that it is an actual, you capture the date as requested or needed by the Law Society. Actually, I'm just going to stick to today's date. It's just easier to report. I'm going to say application fee. I'll say $200. And before I move on, let me go ahead and change my taxes and rates. So as you can see, we support all of the jurisdictions across Canada. Me being in Toronto, I'm so used to the 13% calculator in my mind, everything that I do. So I'm going to go back into that matter and add that disbursement. Okay. So let's go back. The application fee, $200, tax exempt. Now, we facilitate you to further subcategorize disbursements as well. Okay, so that's one level advanced. Not only are we capturing the disbursement, but we're allowing you to now capture how you paid for it. because if you have paid for it, you know best how you paid for it. But this category is you can define whether it's fees paid for client, or you can just call it disbursement application fees, disbursement court fees. Now, this is a rather new feature that allows you to categorize disbursements as well, because if now you have an accountant or a bookkeeper who wants to know which component of disbursements is it harder for you to recover, then it makes it now easier for you as a business owner to make a decision of how you want to deal certain files, certain types of disbursements. So if you realize that many times a small claims matter, it's harder to recover, let's say, filing fees, or it's harder to recover faxes, then maybe it's the opportunity or a cue for you to pay for those using the trust account and basically ask for that upfront as part of the retainer. That's the whole purpose. Okay? Pretty much help you, help us, help you. So let's say it's fees paid for a client. And let us say this was paid out of my general account for now. I'm going to say I wrote a check, and you can even print the check, but I'll skip that, and I'll hit save. Imagine this to be an Excel sheet where you've entered these transactions in the appropriate columns. This could be any other software. Each software has its own learning curve of learning how to use it. We're no exception at uLaw, but once you get it, you get it. Just makes it easier for you to enter this information. So now, this is how you record the transaction as and when it's happened. Let's do another example. Let's say add new disbursement. This time I'll do unit rate. I'll say fax. Now, based on your retainer letter, which then reflects your pre-configured settings or your default costing for disbursements. So by default, you've said it's $1 per fax. So let's say you had 100 faxes. Now, there's taxes involved in this. If you used the fax machine out of your business, maybe there's no expense, right? Or if you really want to report that expense because you went to the nearby Staples to do this fax and you paid them a certain amount, okay, you can do that too. So you can say, I paid this to Staples. And this is the example where it may be a markdown. So maybe you're only charging $1 per fax to your client, but if the fax machine broke down and now you're having to pay $1.50, that $50 is where you've just lost. Okay, so now this becomes $169.50 compared to $113, for example. Okay, and let's say this came out of now your debit account. Now you have two disbursements for this matter. So you recorded these disbursements. Now let's relay it. So to do that is generate the invoice. Now, typically what happens in a law firm, as you know, you could either generate a pre-bill so that your assistant or someone else can generate that pre-bill, sometimes even send it to the client, get their concurrence, and then generate the invoice. But for purposes of today's demo, with the time that we have, let me go ahead and record the invoice. So to do that, I'll hit the complete button. I'll skip the preview, and you can date this, you can put your terms and conditions. So this is when you can recover the money. You can say 2 days. So now you're just in the process of relaying that this disbursement has occurred, and you're going to be sending this invoice over to your client This being an electronic document, you can just drag and drop this into any email that you have, send it to your client. And we talk about recovery. So legal accounting tools, including uLaw, facilitate and provide you this ease of payment retrieval by allowing you to add this line item. In fact, uLaw does it really well. Click on it. The client now can pay for that $313, which is the $200 application fee, no taxes, the 100 plus the 13% for the fax, totaling to $313. Okay? And there's a separate tab for the disbursements. And the invoice clearly tells you the total amount prior to tax and the total taxes involved in this. Okay. So clicking on it, someone can actually go provide their credit card information and pay for this themselves. But let's say this is the old school way where you call them and you're looking to recover. Now it's important that you record the fact that you recovered it. If a client has actually paid you, it's important that you tell any system, Excel sheet, manual system, legal accounting, business accounting, whatever system that you may have, it's important to tell that you've got it. So let's accept that client payment. So let's assume the client's paid you like right away because they clicked on the link. Let's go ahead and enter that. Let's say it was a credit card. If there's a reference, payment reference number, you can put that in and tell us which account the money was deposited in real life. Give your client a receipt, very important. And now you've just recorded the last step of that. So, recorded the transaction as and when it happened. You relayed the invoice as soon as it happened. You've established the rules for recovery, and you recorded these transactions, even the payment, as soon as you recovered the money. Now it's important to look at the reporting. Okay. This is the advantage of legal accounting system because it pretty much gives you the flavor of reports right away. But if you have any other system that gives you this facility, by all means, this is completely your decision in terms of the right tool that works for your firm. We spoke about a few types of reports that tell the story. So let's look at the general ledger. And again, this could be for a date range. This could be specific to a client. I'll choose the month September. I will also generate the general disbursement document. And we'll go one at a time. So here is the general ledger. As you can see, this is spread across all of your clients. And we're specifically looking for Mr. Knight. And there's Mr. Knight Hardy. If you quickly zoom in, on the 18th of September, you had a $200 no-tax disbursement. Clearly tells you the date, the particulars, the total fees, what was recovered, and the running balance. If you notice, we spoke about the running balance because I did all this in the same day. Unfortunately, it doesn't tell you a interesting story, but it's a story nevertheless. It's $113. It also tells you the taxes. Importantly, tells you the client as well as the file number for the client. Okay? So this is what's expected out of your general ledger, and it was created automatically, provided all the information was available. Now, another storytelling document is the disbursement journal. And here are the two disbursement transactions that we had recorded in that one area. Now, a single transaction has now relayed into multiple reports to tell different angles of the same story. The story is that you paid $330 worth of disbursement, you've got it recovered. But this now tells you the story of how did you actually pay for it? Well, the first time you wrote an application fee using a check 564321. Why is this important? It's important when a time comes to reconcile that month's transaction. And the second one was you pay using debit card for Staples. Okay, for the same matter. Two different documents. Now let's look at the fee book. If you remember this particular invoice, when we generated it, okay, this was the payment. But let me go back to that matter. I'm going to go back into the no pending invoice. There was an invoice number that was generated for the 313, which is 3279. Now here is the fee book for this month. It has all the invoices generated for all the clients, the fee, the HST, or GST, PST paid. Okay. And if you come down here, it tells you that it was a disbursement. So there's a difference between a legal fee and a disbursement right there in the particulars. It tells you that this was a disbursement of $200, no taxes. Whereas this, it tells you it was $100 plus a $13 tax, leaving you with $113. Okay? So that was report number 3, readily available to you. Report number 4 is the expense book. Okay? Another compliance document. This captures all the expenses that your firm has incurred, both on behalf of the business and on behalf of the clients, which is the disbursement. So anytime that there's a client name, it relates to a certain client. It also tells you the file number of that client. So if I go further down, there is Mr. Knight Hardy, his file number, a $200 expense. Okay? And the fax that we paid for $120. The reason this is different is because this is the amount you paid for. Remember we mentioned that the fax is where there was a margin down. So the ledgers and journals are everything to do with the client. The expense book is to do with your business as well. Okay? One step further, and I want to bore you beyond this, is the HST document or the GST or PST document. Because now we capture not only revenue of taxes received from the client, but any HST that you have paid or any jurisdictional taxes that your business has paid for. So a single transaction, record keeping, has resulted in 5 different storytelling documents that are handy for you to tell the story to the auditor. So here's the fax of $15.60 that you paid Staples. And here's $13 that you received from Knight Hardy. And we tell you in a snapshot how much of money you owe the government. In this case, this firm owes the government $1,600 for this month. Okay. So this was hopefully a good example to show you how you record general transactions, disbursements, relay them through the invoice, record the payment, recover the money, and then the reporting. It's just a click of a button. With another 2 minutes remaining, I'm going to create another matter for the same client. So let me go ahead and say, for Knight Hardy, I'm going to say new matter. Let's call that LATB. And I'll say Knight versus Steffi eviction. Okay. I'm going to take the classic example of taking $665. That's my lucky number when I do my demos, assuming there's a $500 plus taxes. And I do apologize to our friends joining from New Brunswick and British Columbia. This would, of course, vary based on your jurisdiction. So let's do that first. So let's first record the fact that we've got a retainer. So I'll say new retainer, capturing the date, the actual amount, how was this paid for. So maybe this was a certified check. Going now not into your general account, but into your trust account. Because there are two matters, I'm going to now balance this into the Steffi matter. I can always give them a receipt, but I'll skip that. I've just now recorded the fact that I've got $665 for the second matter, for the landlord and tenant board matter for Knight Hardy. Now let me do the same component of doing maybe a legal fee. So I'm just going to do a quick flat fee. Work complete. I'll say LATB, work done. I'll put the $500. Now let me add the $100 disbursement, assuming that it's an application fee or a court fee for $100. Okay, so this time around, I'll show you the example where it's paid directly from trust. So you can see that that's the projected balance. I'm going to pay this out of my trust account, write a check, and this is for a court fee paid to the Ministry of Finance. Now this is coming out of my trust account. So this was never your money, and hence it's leaving directly from the trust account. And when I do that, you're going to see the projected balance drop to 0. And what is left for you to recover is not the 665, but just the 565. And that, once again, you relay, generate the invoice. Once again, this 565 is amount available to you in the retainer. So it's not so much of waiting for the client to pay you. It's more of your role of transferring the eligible amount. And again, I stress on the word eligible amount, that you move from the trust to the general account, which is clearly articulated in the invoice. So let's look at this invoice, and I'm going to wrap it up after this. So this clearly tells you the amount due is 0. The work complete was for $500 for the LATB work. Again, that's just random. Here's everything to do with your trust account. You had a $665 certified check retainer payment. And if you notice, there was a disbursement of $100 where the money was taken directly out of the trust account. Okay? And you see there's no link for the client to make a payment because this was already being paid for. And 565 is the eligible amount that's going to be transferred. Like how we accepted the client payment, the first example, this time we're going to do a trust invoice payment transfer. So once again, I'll repeat, action, trust invoice payment transfer, and here's the 565. So there's no $100 because this is already been recovered. So you choose that, keeps you compliant, moving it from the trust to general, writing yourself a check, and now you recorded that as well. Now, if you can just spare me 2 more minutes, I'm going to show you the final R, which is the report. Like how we went through the reporting for the general, let's now go through the reporting for the trust. So the client's trust ledger. I'll choose this month. Okay. And if you look at Mr. Knight Hardy, here's the $665 that was received into trust. The $100 was taken directly as a disbursement out of the trust account, and then there was a trust transfer that was done for this particular legal transaction ID of 565 from trust to general. Okay? So with that, I'll probably wrap up today's webinar, reiterating the need for recording, relaying, recovering, and reporting the disbursements that have many flavors and varieties of how you go about doing it. And please feel free to send us a text back or just email us at support@uLawPractice.com if you have any further questions regarding today's webinar. And as always, this is recorded and will be available to you on our YouTube channel early next week. Okay. So thank you once again, one and all, for having joined me. And feel free to ask any questions that you may have now, or you could email us your questions, and I'll be more than happy to answer.